Hi guys, welcome to the webinar. My name is Mark Shawson, the pattern trader. I'll be starting this in just a moment. I'm still setting up here. Just give me a moment. Hi Payman, hey Ronnie. So welcome everybody. Welcome on YouTube also. Hey everybody, welcome. I'll be starting in just a moment. I think we're just about on time here. Just kind of looking at seeing how things close today. It's kind of a nothing to do day. Yeah, Brendan, I don't know about why the elite membership disappeared. I guess we I'll put our support. So if you're interested in the elite, just send over a message and they will hook you up with a member of our team. So thanks for inquiring though. All right, I think we're there. I'm just going to go ahead and get started. So first off, this is the last day of the 4-day live event where I kind of went into the markets live and showed you how I executed trades. Obviously, not all of the trades win. All I'm trying to do is take a piece out of the middle of big moves in the markets. And so, that doesn't happen every day, doesn't happen every week, may not even happen every month. I just need 3 good trades a year. So I try to just share some of my philosophy, my price pattern, price action, how I apply this methodology and analysis to about any trading market. Doesn't matter if you're trading FX, if you're trading orange juice futures or the euro yen, you can use these techniques and methods. I shared my book yesterday, which laid out the 4-step plan that gets you closer and closer to the bullseye of a high reward versus low risk trading setup. And that's what we're looking for in the markets. I thought I would start this a little bit differently after kind of 3 days of me just talking my brains out. I just wanted to see maybe what you guys took away from this. And so I don't know, after our discussions, if you went and kind of looked at the markets and found any ideas. So what I thought I would do just to start is kind of throw it back to you guys. And, I'd like for you to share with me what you're looking at. So if you're looking at the, whatever it is, Australian dollar versus the US dollar, what you're looking at, if you're looking to buy it and selling it, and then why. And I'll take a look at some of them just to see how you may be interpreting what I'm saying. So sometimes, I live in my own brain. I've done what I've done for so long. I try my best to explain it, but I appreciate that, it's not all going to sink in all at once. So what, I'd really like to do is, first off, please let me know that you can see my screen and hear me clearly. So I don't want to kind of get going and then feel like nobody's hearing me here. So everybody's saying yes. All right, so let me kind of go back. I think somebody said, so Andrew says, I'm long gold. There's a double bottom over the last 30 days, price target 18 to 25. So yeah, gold is, very interesting. I obviously saw, so my price target for the last 4 months on gold has been, sorry, I can't load. Let me just wait until this thing recranks up. And I'm not sure why these things are taking so long to load, but so, I was saying to our members for the last 3, 4, 5 months that, gold has been trading within this, long-term ascending, broadening price pattern. And, even from the 1900 level when, everybody was screaming that gold's going to go higher. I said, I thought that gold was going to go lower. And again, it's not based on, what Jerome Powell said. It's not based on, oh, so these were kind of my positions in the market. So every day I show you how I win in the markets. So these are some trades I just took a poke at. I tried to short Beyond Meat, took a, small poke at Tesla. I took, position in Zoom. I was actually short overnight. I made some money yesterday. And then, went backwards. So I lost about 22 grand today, but I made about 75 grand yesterday. So that's just the way it goes. So I just wanted to show you that, every day is not a winner and it doesn't really matter. I basically closed all of these, trades out, and I'll start clear tomorrow. So getting back to gold and Andrew's thought process here was that, let me just blow this up so we can all see it a little bit better. Move this guy over here. So to me, everything is based on price action and price pattern. So all the way, we can't really see it here. You had a very long-term double bottom, inverted head and shoulders. It was like a 5-year basing process. And then once it broke above the neckline, which was around about 1360, this represented a huge breakout of a foundational pattern that indicated that prices were going to go higher. And from 1360, we went all the way to 2100, $1,700, whatever, $700 move. And then, I was telling our members, and, this is kind of the hard part of what I do. And it's kind of the misgivings I had about starting this business in the first place, because trading really is a very individual and, solo affair, right? So you got to be willing to scream sell when everyone's saying buy. And that's basically what I did. I'll explain why I did it at this process, but I did. I was telling everyone to bail out right at the top there. But, I do what I do. I make, I lose. I can accept the responsibility. I'll wake up tomorrow and figure out another plan. But, now I have, tens of thousands of people who, like my message, share my message. And so when I say something, I feel like, I'm not just saying it for myself. I have a responsibility. So, it makes it a lot harder for me, quite frankly. But, I undertook the responsibility, and, I really want to kind of share what I think works in the market as opposed to everything out there that really doesn't work. But after I saw the breakout here and we made a hell of a lot of dough in this run-up, I was telling our members to bail out right at the top. Now, there was really no pattern that told me to get out at the top. But, again, I've just been watching these markets so long that I have kind of just these rules in my head that the market does certain things, and after you see certain things occur. And what I mean was, you can see leading up to these price bars. So this is a weekly chart. Each one of these price bars represents 1 week in time. And you can see this, what I call huge volatility expansion. And what I mean by volatility expansion, you can see that the ranges from high to low were significantly more or larger. So that's the low, that's the high. So that was what, 1,800 to 1,900. So each one of these price bars was like $100 in gold for, each week. And then you had 3 consecutive weeks where you had this massive, what I call volatility expansion. The ranges just started to expand way beyond what they had in the past. And you can see that leading up to that, these price bars from high to low, were very contained, very orderly. And then all of a sudden, it just started to get wild and frothy. And so whenever I kind of see froth in the market, I just have an internal rule that, hey, I made so much money. I made 7 figures on this run up that I'm just going to hand it over to the next guy, and good luck to him. If he wants to take this from 21 to 2,500, then, I'm just going to leave something on the table. But when I said get out here, JP Morgan had a price target of 3,200 on gold. Everyone is talking about how gold is going to go higher. And I thought, well, if I tell everyone to, get out here and it goes to 2,500, I'll rob them of, further opportunity. But it turns out my instincts were really good. And I thought, well, if this wasn't the end, at least we were going to go into a significant consolidation. And then I would kind of take a look-see, after this kind of shook out. But then there was a series of things that after this transpired, there was all these, different patterns that started to emerge. The symmetrical triangle there, the head and shoulders top here, another head and shoulders top here, the double top here. All these things started, suggesting that, gold was under pressure. Even though, everybody was talking gold up in the market, everybody's like selling gold on the, the internet, everyone's talking about gold. But, that's why you can't listen to anybody. The only person you can listen to is Mr. Market. Maybe that's sexist. I should just say the market. You have to be really sensitive these days, I guess. So, I just saw that gold was under pressure. You had these price bars, these key reversals, these double tops. And I was telling our members that this thing is going lower. But, it wasn't easy. You had this huge sawtooth grind, where it would just bump and grind. And again, this is the process of the market. It took about really 3-4 months to shake things out where I really saw clear opportunities, to carve out, a major bet. And, then it started to occur to me, not only, did I see all of these patterns within the cadence here, but then, I started to see that if you connect the highs and you connect the lows, you have this huge ascending, broadening price pattern. I'll show you this, on the pound versus Australian dollar. So an ascending, broadening price pattern is when the market goes higher throughout the pattern, it begins life in the pattern really narrow and then widens or broadens out at the top. And so, I see these structures all the time. And typically this is a bearish price pattern, which suggests that if we broke here and really meaningfully broke, then, I know where this thing's going. It's going right back to here. Now, it seems a little far-fetched. I can't really, dial into that, which suggests that gold may be bottoming here. So what I've learned is that while this is inherently a bearish price pattern, is that the market acts unto itself within these patterns. So instead of having a defined mindset, which is something that took me really decades and decades to, to work through, because when I first started, studying, technical analysis, I got really, into it, really involved, really liked it. It really resonated with me. I'm a very visual person. And then I used to say, well, if you see this pattern, then it must be. If you see this thing, this is a bearish price pattern. So, you just have to look at it that way. And what I've really switched my mentality, and this is where I started to make so much money, is that I just kind of put a boundary or a structure like you see around this, and then see how the market responds within that structure. So I'm going to show you this ascending, broadening price pattern on the British pound versus Australian dollar, in which it acted one way and came to the bottom. And then I'm going to show you this ascending, broadening price pattern on the NASDAQ, where once it came back to this thing, it was a huge inflection point, which was the bottom of the NASDAQ, in the pandemic. And then the NASDAQ went and made a new high. So now gold is going to do one of these two things. It's going to crack through the support level here and go, substantially lower, which is kind of hard to visualize, or this may just be it. We may have just caught a bid right at the, the bottom of this, ascending, broadening price pattern. And we could be looking at a meaningful bottom in gold. And I'm kind of open to both things. I'm not just going to say, hey, it's a double bottom, this is going higher. And then, if the market starts telling me something, be ignorant of that. So while, this is very powerful, these two lows, you have a double bottom. And then in addition to the two lows, the price action really suggests that we've, hit a substantial low where you made a new low in that week. And you remember that these are weekly bars. It takes 1 week to make the high and low. So you can see in each one of these weeks, the market tested those lows around 1670. And by the end of the week, the buyers were in charge. So now you have this double bottom with this key reversal price action, which to me is very, very powerful. That being said, now, like I said, whenever I kind of feel like, okay, it's a double bottom, I want to get long. Now I picture myself getting long, and then I say, can I see, my trade going from one, level to another? And, frankly, I can, but not without, so, it's kind of like showing you with, pound New Zealand. When a market kind of, comes down so fast like this has, where it kind of has this wall. Typically, you need to build some space between this down wall and, a move that's going to go in the other direction. And so that's why I'm kind of, having a little trouble, feeling like I'm going to, I want to load up the boat here. Because I think, you could get kind of one of these false moves. And, but again, we could just, be just traveling along here, and eventually, this breaks out, and we can say that this was the double bottom, underpinning the whole move. So, I'm going to show you the monthly in a minute and show you kind of why I still have reservations. So when I look at charts, I look at the collective price action. So you can see all of these weeks where all of this price action, it just looks heavy, right? And so now what you got to say to yourself is this, going to cut through all of that like that? It could. We have the most dovish Fed chairman in the history of the United States. He's just throwing tons of money at the market. The market's talking about 4 or 5% inflation. And, there's certainly a scenario where gold can just get lit on fire here and get going. And this, we'll look back and see this was a pivotal thing right along this support line. But the point is that, I made a ton of dough, on the big move going higher. And then I made a ton of dough right in this area here. So I talked about making, taking a piece out of the middle. So from 2100 to 1650, there was, $400 of which I took at least $200 out of that. So it was really after this. So, first off, I identified the major pattern, this ascending broadening. And even here, and I'll show you the emails, I was telling our members that I expect the market to go there. And again, I just didn't pull this out of my shorts. It was just based on this defined pattern here, where if you connect the lows, this is where, it indicates the market had to go. And so once I understood the major pattern, then I started looking at the little patterns and the price action here and trying to figure out, okay, once I understand which way this thing wants to go, although, in here it was kind of a bucking bronco, how do I kind of join on to this thing that's, going to go to where I think it's going to go? So, to my mind, the way I figure that out is I just wait for the market to tell me, to point where it wants to go. So you had these two guys right there, that double top and the key reversal price action, where made a new high, close on the low, made a new high, close on the low. So you had that double top key reversal price action that pointed in the direction, the market wants to go. And now we have to say, is this a double bottom key reversal that's pointing in the direction it wants to go? And, I'll kind of share with you kind of my conflicts in looking at this thing. And then, sometimes perfection is just the enemy of the good. And sometimes you just have to stick your toe in the water, take a low risk trade and see how it goes. I mean, this is a good enough, basis for taking a trade. So once I saw this key reversal double top price action, Then I started looking for ways how I can, get in this thing. And here was the first marker where you had this inside bar. And what I mean by an inside bar is that the range of that week sits within the high and low of the other week. So I kind of use these key reversals and inside bars. I call these insurance day bars because I figure if I can put a sell stop to enter the market here, put my buy stop here, I understand what my risk is. And then I also understand what my target is. So I started getting in, send out an email to get short gold at 1841. And then 2 weeks later, there was another inside bar right here. And then I said, just put an order underneath this guy at 1797. So, I like to verify what I'm saying. So here was the ascending broadening price pattern. We were just in the middle of it, right at that double top key reversal. So it's not like I'm going back and retrofitting what I'm saying to you now. I said this to tens of thousands of our members around the world on January 10th, 3 months ago. And again, I was looking at spot gold, getting in at 1867, based on my analysis of an ascending broadening triangle bear price pattern, which meant that prices were likely to go lower. I said last week's massive key reversal is pointing the direction is going to go lower. My target objective is 1700. So I was saying that 3 months ago when gold was trading at $1,900, when most of the world was saying, hey, gold is going higher. And this is why you can't listen to anybody. You have to look objectively at what's happening. And then I will add to my trades. So then, I sent out, 2 weeks later, gold had come back down and put on an inside bar and said, sell gold based on the same ascending broadening price pattern. At that time, it, had a huge down move. So I said, shorted on a rally, and we get ticked into there. And here's my trades: 1841, 1795, got out at 1687, and made a chunk of change based on that bet. So this is what, I try and do, is take a piece out of the middle of large moves in the market, in contrast to putting up a 15-minute chart. This is a weekly chart, right? These are weekly bars, not 5-minute bars or 4-hour bars, because this shows you, what's going on. Most traders, I think, are looking at a screen with a 15-minute chart. And with a 15-minute chart, you really don't know the cards that you're holding, because the market is random. The market can go anywhere in the next 15 minutes. This is a weekly chart. I'm trying to see where this is going to go from week to week, not from minute to minute. And so it's a little bit of a distinction in, the way of looking at markets. But, my whole mindset is, if you're going to get a $400 move, why do you want to, battle it out every day trying to take 7 pips here and 27 pips there, if you can take $150 out of this move? So, back to, where are we now? This looks formidable. We hit this thing, and again, I'm going to show you how the market plays within this ascending broadening price pattern. And so, we just have to look at what the market is telling us. Now, again, we have this, sizable downtrend line that we've just got to, go up against all of this history. And again, there may be, a spark that lights the match, and, this thing can, turn around like a rocket. It went to my target objective. It went to the support line of this ascending broadening price pattern. And now I'm fully open to, something where we could do this. But, this is where it gets to be a tug of war as to which, who's going to win this battle, these huge key reversals here or these key reversals there. And, we're, going to get somewhere in the middle, and, we'll have to figure that out. Now, the other thing, when I'm a little bit ambivalent, whenever I'm a little bit ambivalent, I just go to even a larger time frame. What I mean by larger is, I'm looking at weekly bars here. Now I want to look at a monthly chart. So I want to try and really understand, what's going on in this market from a macro standpoint. Now, it's not always, I mean, yeah, you can trade monthly bars, but obviously the ranges are much bigger. You have to set your stop much wider. But, so I look at these macro charts just to give me, a view of, what's really happening. And if I think this thing is bottomed, then I want to kind of see how that lines up on, the big picture. And again, I apologize. I've been, having trouble with these charts for a couple of weeks now, and I don't know why they're so slow in loading. Yeah, I don't understand what's going on here. I might have to reboot my computer because I had some problems. They had to do some configuration today, and maybe I should have rebooted my computer. I mean, I could pull up a MetaTrader, but I just can't see it as clearly or show it to you as clearly. Yeah, I do not know what's going on here. Okay, better late than never. So this is a monthly chart where each one of these price bars represents 1 month in time. And so I keep, one eye open on all of these time frames because, at certain levels, it becomes, very important when, gold had a huge resistance here, and then we kind of get back, in the same area again. It's not kind of like pound versus New Zealand dollar when it got to 198. It's not a surprise that, you have a hiccup or a bump in the road. And so you can almost see this ascending broadening price pattern on the monthly too. And you can see how perfectly we came down and hit that support. There's no accident the market does what it does. And so the question now is, it's like the yen trades, is this going to be a rocket ship here, or are we going to roll over? And, this is, could be a huge, massive double top. Now, I'm kind of thinking that this is, the same reasoning that I applied on the weekly. You can see the expansion of volatility. These monthly bars, how big they are. It just suggests a lot of uncertainty, a lot of anxiety. But again, you can't just draw conclusions out, from that. But so now what I have to say to myself is, and this is what I do this visualization where I'm going to get long here. And so can I see, prices doing that? I suppose you could. You've got to cut through. So when these things, here's these two massive key reversals here. And so what you have to say to yourself is the market action going to be so ferocious that you're going to be cutting through all of this price history? And, I have my doubts, but, we are, in a certain environment where anything could happen. The Federal Reserve in the United States is just pouring fuel on the fire. This guy's saying, I'm never going to raise interest rates. I don't care if inflation shows itself. It needs to show itself for years before I change my mind. That's what he said. So, I mean, anything's possible. But, again, you can't listen to all that. Just look at what the market's saying. Set up a risk reward, based on what you're seeing. If it doesn't work out, then, just move on. But you are at this point where something, was bound to happen. And this was just a key area where, there was at least going to be a bounce here. So just to put it in perspective, I want to show you how ascending broadening price patterns work, where, you can come here and go and make a new high, or you can break this thing, and then you're going to come right back to the beginning. At least that's loading a little bit quicker. Let me just, so this is the pound versus Australian dollar about a year ago. And again, I just see these patterns and I just need one of these patterns to, make my year. Because once you see, a sizable pattern and you kind of know what it's going to do, once that pattern is resolved, then I just go to town on it. So here was the same. And so really what this should stand out to you, it doesn't matter what you're trading. I showed you an ascending broadening price pattern on the NASDAQ earlier in the week, gold, and now the pound versus Australian dollar. You couldn't have more, varied, trading instrument. So it doesn't matter if you're trading corn and you see this, or orange juice futures, or the euro yen. It has the same implications. So again, this is an ascending broadening price pattern. It's ascending throughout the pattern. It starts out narrow and then widens and broadens at the top. And like I said, this is usually a bearish price pattern. And the great thing about this is that once this thing breaks this supporting area, we know exactly where this thing is going to go. Right at 196, where I advise our members to get short here, I said this thing's going to 175 to 178. And I think we came a hair under 175. Why? Because it just came right back to the beginning of the pattern. So now you can see that we're at the moment of truth in gold. It's hard to imagine that gold's going back to $1,100. So maybe that suggests that we're going to get one of these moonshots. But all I want to do is show you market structures and then how the market plays within these structures differently. So I'm going to go to the NASDAQ now. I just want to show you this whole thing. So let's see, maybe I can go one back. That's good. So now we'll see two visualizations of how we see an ascending broadening price pattern and how the market did two different things. So you can see when you join these lows. And again, it's just amazing to me, after more decades than I'd like to acknowledge in trading, the beauty and symmetry of trading. So you come to the top end of this thing, and then all of a sudden go exactly where all of these lows connect. You have a historic pandemic that was completely an outlier, and yet somehow sent prices to where they needed to go based on, this pattern. I think I drew it badly. I drew it wrong. So can you see it's the same pattern? It's an ascending broadening price pattern, but it had two different outcomes. So we saw this with the pound versus Australian dollar. Starts out narrow, widens at the broad end of it. But unlike pound versus Australian dollar, this thing, caught a foothold right at the lower support edge where gold is and went there. So now you have a visualization process of what gold can do right around this area. It's going to do one of these two things. It's going to break and go like pound versus Australian dollar, or go and make a new high. Probably the latter. So we'll have to see. So Andrew, I hope that kind of gave you a little bit of thought process of, what I'm looking at, how I'm looking at gold, and, probably overthinking it. I probably just should get, long here, just see how that, that feels. I just feel like, you're going to get a pullback. You're going to get another look at it. And just check out silver. See, silver, looks much more ambiguous. It's just locked in this, trading range. But again, I could make the case either way that this thing's going to go make, but in order to make a new high, it has to go, through all of this clutter. So that's why I'm still on the fence about the metals. I still think they've got work to do. So that's why I'm not, both feet in right now. And maybe I'm overthinking it because gold, looks like there's just a huge foothold that a year from now, we might look back and see that was the major bottom along that support line. So Carol says, what is the logic behind the fact that an ascending broadening price pattern is usually bearish? There's no logic. There's, certain patterns that have certain implications. So when you see a pattern like this is called an inverted head and shoulders. But there was more to this than just this. There was three things that were going on here. First off, you had a 7-year downtrend line that connected right at the breakout of the neckline of this ascending broadening price pattern. Then you also had this bear trap where it was sprung during the pandemic. And let me just put on a bigger chart because it's worth a discussion. So three things came together in my mind. So sometimes, look, I'm on the fence, this week, there wasn't a lot of conviction because there's just, the markets are just trying to digest a lot of information. And, I don't see anything that clearly that I really, love, like Lyft like a couple months ago, or the NASDAQ that was going to go down. And so, the market goes through certain phases where I just trade lightly, and today I lost and yesterday I won, and that's just the way it goes. But there are certain times, and I know you can't see this thing clearly, but just for the sake of this discussion, it's fine. So you can see this is silver, XAG USD. It's had a huge double top at 50 bucks. Then it also had this descending triangle bear price pattern. And once it penetrated the neckline, we went into a 7-year bear market. So from $26, this said this market's going to go lower. And for 7 years, we went lower, all the way down to 11 bucks. So these patterns have implications. When you see a double top, descending triangle, it busts the neckline. It tells you where the market's going to go for a lengthy period of time, in this case, 7 years. And really, this was just a mind-numbing market. I used to love trading silver, when I was a commodities broker, but you can see that for 7 years, it just kind of went to sleep. It just traded between, $14 and $18 for 7 years. But during the pandemic, and I think I kind of talked to you yesterday about this concept of a ledge where, market that gives you a sustainable opportunity doesn't hit the same price area, 400 times before it gets going. So right in here, there was a double bottom. And then you can see it lifted here and then it started going higher. And then I'm saying to myself, is this, the liftoff in silver, is this kind of going to be, one of these? And then I had, one of these internal conversations with myself. And I said, look, if a market's good, it's not going to give you, 9 opportunities to get in here over 7 years at the same level. So I knew that we had to take this price out. Even when we came up here, I just said, this is not going to be sustainable. And it took a freaking pandemic to push it to where, but it's just amazing how prices end up, where they're going to go. There's always some event, there's some catalyst, you hear it on the news and you think, oh, this is why silver went down. No, silver had to penetrate those lows because the market doesn't give you 19 opportunities to get in. But, when a lot of institutions or, traders see this level, they say, okay, all I need to do is put, a sell stop underneath this level. And when it penetrates, I'm going to, be put into a mammoth trade. And that was true for about, a nanosecond. Right after, the pandemic, the market broke this ledge, went from 14 to $11, and was this huge bear trap where if you were bearish and you start chasing this thing, all of a sudden it was back in your face. And then once it got above this neckline, then it was like a bear trap and a short squeeze. So in this time frame right here, I was looking at an inverted head and shoulders. I was looking at this 7-year, let me just pick a different color here. You can see we had a 7-year downtrend line. And the neckline, which is simply the line drawn through the inverted head and shoulders pattern, and the breakout was in the same area. So I was saying to our members, this is just light it up. And I started, putting multiple entries, and I personally made 7 figures on this trade. Because this, sometimes the market just, at some points, that's just, the market points where it wants to go. So you had a bear trap, a short squeeze, an inverted head and shoulders, and a breakout of a 7-year downtrend line, all occurring around 18 bucks. So I started, layering trades from 15 to 18, and then put a, take profit, I think at 25.87. And then it ended up going to 30 without me. I was happy with what I made, and then I was just going to sit back and, watch, see how it. And so now you can see we've kind of got this double top. We also have this. So now it's a question of, is this pattern still, governing this trade? This inverted head and shoulders. I mean, because we also have a double bottom here. So you have the inverted head and shoulders, the double bottom, and it kind of suggests that, this is what, we should see. But for me, prices look heavy in here. I can't really see a clear path. So like I said, when I put on a trade, I want to see that I'm going to put on a trade without any noise. And you've got all of this history nearby. And you've got to say to yourself, do I see that there's going to be, enough of a thing to push silver through this noise? And, look, it just could take time. It just could take, a matter of, it could look like this. And we're talking about weekly charts. So it could, take another 6 months to, build this leg until it puts on, another move higher. But right now, I mean, this is, kind of looking heavy in here. Yeah, I could make a case for this thing rolling also. So this is why I kind of have difficulty with the metals right now. They're just in this kind of no man's land. Gold is put on a very prominent pattern, and maybe I shouldn't overthink it. But then I got to see the trajectory without any obstructions. And certainly in the case of silver, I can't make that. So, silver's in just kind of this miasma, but, this kind of looks like a very prominent support level. And we should see silver, kind of incrementally going higher. So this is another case where, you see all kinds of patterns. Here's a double top. Here's a head and shoulders. And you say, well, it's a double top, head and shoulders. So if that's the case, these are bear price patterns. And, once you, clear through the neckline, we should do this. So this is the games I play, the visualization games I play. And again, head and shoulders looks just like a man or woman's. This is the left shoulder. The peak is the head, and that's the right shoulder. So that is ostensibly a reversal price pattern. It's a bearish price pattern. And if we go to a chart textbook, we'll say, well, this is a textbook classic pattern. And this is what I used to do when I was young. And then, the market would just go a little bit through the neckline. I think, okay, I got this tiger by the tail. And then, it would go higher, and I would get obstinate. I would keep selling into this thing. instead of recognizing that this thing didn't do what it was supposed to do. So, this is how I look at patterns. They're not set in stone. If you see something, then it should do this. And if it doesn't do this, it's going to do that. So, it might sound like, I'm trying to have my cake and eat it too, but that's the reality of the markets. The markets lay all of these traps. So you can see that this was a bear trap where you got incrementally below the neckline. You thought, okay, fine, got this thing. And then it does that. And then now it's called a squeeze, where now you can't get out. There's not a day that it's lower. And so every day you wait, hope, that you're going to get back to even. And then all of a sudden it's there. So right now we're just, kind of in this large consolidation, but, silver should, go higher. If on the other hand, we start cutting through this neckline again, then that becomes the next support level. And then, we'll see. So, we're just in the zone now where, there's an inflection point happening in a lot of these markets. All right, so I asked you guys to share some of your trade ideas. I talked at length about Andrew on gold. Let's see what else others had to say. Godwin said, "This is awesome again, Mark." You're welcome, Godwin. So Ian says, "Can you analyze gold and NASDAQ on small time frames?" It kind of negates everything that I'm trying to say. And why don't I look at it on a 15-minute or a 4-hour? Because I am not trying to take 20 cents or 70 cents out of the market, every 15 minutes and play, a game of chicken with my broker. I want to catch these monster moves where I got in at 18, I got out at $26, and I made $1 million. That's what I'm looking to do. I can't do that on a 4-hour chart because it doesn't give me enough history to, understand the cards that I'm holding. So the market's always going to play these games of, faking you out and giving you so many misdirects that by the time it does something, your head is blown. You've been watching this on a 15-minute chart for, 4 months now. And, you can't see the forest for the trees. You start losing your objectivity. Even I feel like, if I look at the daily and the weekly, and I feel like I'm objective, I can feel over time, this is a function of being a human being. You just assimilating so much, you're doing so much, you're trading, and the human mind can only do so much. And then I find that if I take a week break or even a 3-week break, and I come back, all of a sudden it just like is as clear as bell. I just can look at a chart and every time I start trading after a break, I make a fortune. And then every time, I kind of get into a grind, like, I try to do certain things today, then it starts wearing me down mentally. And so you've got to be very aware of, what's going on in your own brain when you're trading. It's kind of like eating. It's like you can't think about what you're eating. You got to think about what you're feeling when you're eating, right? So we have different emotions. If we had a great trading day, we reward ourselves with pizza and ice cream. And then, if we have a bad trading day, then we feel like shit. And then we just eat pizza and ice cream. And it's all about feelings, right? So the market's the same thing. You got to be aware of what you're feeling. Are you going through a divorce? Are you going through certain business struggles? Are you in an over jubilant, thing? So you have to be aware of what your mindset is when you're looking at something. And I know a little far-fetched, but psychology, and obviously when you're going through something like this, it just shakes you. It's like you don't know which way is up. And that's why I had to peel back to the weekly to understand that we have, an inverted head and shoulders, you have a double bottom here. And by large, those are the governing price patterns, which should govern prices higher in silver. But, again, it's not going to be easy. Silver's not going to just cut through all of this history. So there's going to be a lot of ups and downs and shake you out and, that kind of thing. So that's why I don't analyze on smaller time frames, Ian. HA says, what is your, so instead of saying, what is my view, what I wanted to hear from you guys is, what are you looking at? You know, do you want to buy something or sell something, and why? And then I can understand, you know, if you're understanding my explanations, or, you know, and again, maybe you'll, you know, you'll share, give some insight to me. So what I'm looking for is, what are you guys looking at? So Muir says, perhaps the NASDAQ is forming a large island top above of the rising wedge. So when I look at the NASDAQ, you know, the proxy for the NASDAQ is the triple Qs. And so whatever the NASDAQ's going to do, the triple Qs are going to do. So take a 4-month window at this. So I don't really see the island top. I mean, this is a gap higher. Yeah, there's some nearby resistance that, you know, you always have to be mindful of where, you know, a market had, you know, a troublesome point. But this thing looks up and away. We had the key reversal yesterday, made a new low, closed on the high. And so we're just going from strength to strength. In fact, so, you know, look, patterns, you know, give you a look, they play themselves out, and then, you know, new patterns develop. And sometimes, you know, we have a governing price pattern that governs the price action for 5 years. And sometimes it's just for 5 weeks. So, you know, in this period of time I shared with you, I saw the ascending broadening price pattern. I saw the double top here. I saw the head and shoulders here. And then I also saw this island top right there. So you had 4 bear price patterns suggesting that you were going to have a bit of a slip and fall here, which is all I need. That's a 15% move. And if I can lever it up on some derivatives, you know, I can make a ton of dough, which I did do. But, you know, that was then, and now this is now. So this, you know, the NASDAQ's in a long-term uptrend. And so within the uptrend, there's always going to be times where you have these counter trend plays, but it's counter to the main trend. But now looking at the NASDAQ, you know, we have a very healthy looking interim double bottom. And now we're just, you know, going to retest the highs. And now it's a question, what do we do up here? But, you know, I think this thing looks like it's still got some legs. So I don't see an island top here. So when I saw an island top, this was the gap here and the gap here, but you had a collection of, you know, kind of a lot of price history here. This is just, you know, this was an island there, and it's just gapped above there. So I don't see this as a top. When you look for a top, you know, let's say, you know, it gets here, then I want to see a pattern like this. We, you know, you make a new high, close on the low, right in the same area, just like gold did, you know, when it made a new low, close on the high. This made a new high and close on the low. So, you know, I would want to see the same thing where, you know, you have something that looks like this, you know, and then, but I can't see it. This thing looks like it's just, you know, breaking out from strength to strength. So that's why I closed all of my short positions today. I just didn't like the feel of it. Olu says, thank you for the session. Do you use any other indicators? No, this is all I need to make a lot of money. This picture here, price and time, daily price, weekly price, monthly price. I just want to, again, take a piece out of the middle. I bought puts right here when the QQQ was trading at 334, and I got out right there under 300. So I took out this entire piece with, you know, some very leveraged derivatives and made a bunch of dough. So that's all I'm looking to do. And, you know, I don't know why I didn't do it this time. I mean, you know, this thing has been forming this bottom. It's in a long-term uptrend. And this thing is just going from strength to strength. I mean, if we look at the weekly chart, it really just came back to its neckline. I mean, its support line. So this is the weekly chart of NASDAQ. And you can see we've just been observing this line. And so you can see that the market dropped from here just like it did from here to here along this line here. So these markets are just amazing at, falling back to, their former things. So, and now, you've got a healthy amount of price history here. So it doesn't look like you're just going to cut through that and do that. So this was the ascending broadening price pattern I was looking at on the weekly. It was a little bit more clear on the daily. That then suggested to me that right at this top, I thought we would get a move at least to the support line and probably through it. And that's what we did, almost to the beginning of this. So we got exactly the move that I was looking for. And now it's on to the major trend of this thing is obviously higher. This thing's just been adhering this huge trend line. So, you do get hiccups along the way, but they are just counter trend plays in a major bull market. So this market does not look over to me. And you'll notice Olu's, sorry, let me make sure. Olu's question, I don't use any indicators. This is all I need, this picture. Price and time to, see a history. So, if I open this chart, I say, well, what is this thing doing? Well, obviously it's in an uptrend. And now you're just trying to find ways to get in, sync with this. And then sometimes there are patterns like occurred here that give you a counter trend move. And so I'll take out pieces of all kinds of moves. Trend plays, counter trend plays. And I'm just looking to take healthy chunks out of 15% moves. So I'm just looking to see if there are any other people who. So instead of saying, what do I think about something? What I wanted to do is see what you are seeing. And then we can, analyze it together. So instead of saying, what do I think of something? After 3 days of listening to me, I'd like to understand, what are you looking at? Why do you like it? And then we can look at it from that. So hang on a second. So Robert says BNTX has formed a symmetrical triangle. Let me just go to this and then we can read this out. This is a weekly. Let me go to the dailies. So you can see when, I'm trying to look at something, the more history I have, the better. So Robert says, BNTX has formed a symmetrical triangle, but now it seems to have broken the trend down, now seems to be retesting to the upside or the downside. So yes, I kind of see like a, more of an ascending triangle, but I can see, you can see that as in a symmetrical triangle too. So, maybe it's broken out of this symmetrical triangle where, so maybe it's just breaking out now. And so, this is, in an uptrend and it's now breaking above this thing. So now the question is like, dollar yen, is this a bull trap where, the bulls get here because it's pierced this thing and then all of a sudden you find it down here. So you can see it's consolidating here. And if we break above here, then it's likely we're going to get, a move higher. But, this is a market that's a little bit landlocked. Look, so very valid, very valid comment, Robert. So I'm not going to look at things just, for me to look at them. What I want is for you to tell me what you see. So Rohit says, I bought Euro Yen at 137. I think it's ready to move higher. So I want to know what you're looking at, why you got in, what the pattern was, what the price, what your thinking was when you got in. So Matthew says US dollar is in a CAD is in a downtrend for a year, failing to break the trend line, waiting for break of the trend to buy back to previous highs. So if you're saying it's in a downtrend, why are you trying to buy it? So let me just open it and then I can see what you're looking at. Again, I apologize for the delay in these things, charts loading. So this is in a downtrend, and I don't know why you would try and want to buy this thing. This is in a clear downtrend, as you said. So this is just not something you should try and buy. I mean, look, sometimes you get these short covering rallies where it gets bunched up in certain areas, and then you get, something that I just feel like this is, look, it could happen. I think this thing just looks like it's going to keep going lower. So you can see it's just been a long term. Actually, the SQQQs, which are an inverse of the QQQs, look like this. And then they never went anywhere, made new lows. So I think the path of least resistance in dollar Canadian is lower. Makes me nervous now to reload another chart. So we are at this support area in dollar CAD, but I wouldn't buy this thing. Sometimes I'll buy things for counter trend moves if I see that there's a clear move, but I can't see that I would be really comfortable thinking I've got, 150 pip move here. This to me looks, so bearish. So we made this head and shoulders on the weekly, and now we are at these major support levels. So, we could just hang out here, but, I don't think I would play with this thing. I mean, it just means that we could do this. I wouldn't fool with this one. I don't think there's enough on the table to think that there's an up move here. So I think this is just trading within the cadence of this down channel, and probably will, retest this support line at 123 before too long. David says, I'm seeing patterns far more now. It's helped my trading tenfold. So good on you, David. I'm glad I could help. So again, okay, so Graham says Baidu has, so let's just check out Baidu. Funky looking thing here. So sometimes, these things get into areas where it's just hard to make, heads or tails out of these things. Baidu has completed a head and shoulders, then retested the neckline. I'm looking to sell at 215 for a quick ride down to probably, yeah, it looks like that. And, perhaps, but yes, I've just learned that sometimes stock charts or any charts, can be funky, where they make their move and then it's just hard to tell what they want to do. So yeah, this is a key, resistance area. And I would just look how, this is a double top, head and shoulders type thing. And now we're back to the neckline. So yes, we are retesting. But, when I'm looking to take something, I want to get, that's why I call it an insurance day bar. So when I see something, I want to get behind that bar, so I know where my risk is. So right now, I don't know where my risk is. It's getting really microscopic trading ranges. And then if you short it here, you could find it there. So it's really hard to assess your risk because, your risk could be anywhere. So what I like to do is for this thing to play out, do something, and then show me something where, it does one of these, and one of those wouldn't even be enough. I'd have to see like a collection of things. And if I saw something like that, then, I would be ready to take it lower. Right now, it's really ambiguous. All of these, like I said, these NASDAQ things are popping off these long-term trend lines. You can see it hit here again. And so, this actually could be, a busted pattern. And again, just to be clear, a busted pattern is when so this was a pattern all the way up here that you obviously, when you saw it, you could have traded it. I mean, you saw the double top. Once you see a double top, it indicates the market's going to go lower. And it did. It went from 350 all the way to wherever this thing was, 180. So that was a valid pattern. In addition, you had the head and shoulders, and here's the neckline. So you're saying, okay, once this hits the neckline, it should go lower. And it was at 230. And if you shorted that, you could have made, some dough trading that pattern. But now, sometimes these patterns, they last for, weeks. You can see that silver broke that low of, $14 and then, came right back into, the trading area. So it then busted the implications. And what I mean by a busted pattern is that, yes, it seems like the implications of this double top head and shoulders should say over the long run, we should see this. I kind of get the feeling that this is a trap and we're going to see that. Well, we'll just see how the market is. But again, if I'm going to buy something or sell something, I want to have something behind me where I know where my risk reward is. Some bar, some set of prices that, I can clearly see, where the risk reward is. Just go and see what WRK did today. I have a feeling this is, so let me just peel it back to even a lesser time frame. So first off, just to put this in perspective, I talked about this earlier in the week, why I like this chart. You have a double bottom here, you have the head and shoulders, and I think this is a pattern that will eventually send this thing higher. Now, you're obviously showing some resistance up here. Tomorrow's going to be an important day, how we kind of trade up here. You've got this key reversal down here. And so effectively, you're just trading at these multi-year highs up here. You're just, consolidating. The more this thing consolidates, the bigger the move is, when it comes out of here. I think it's going to be higher. And, I probably am going to get a position on as early as tomorrow and add to my position. So this is WRK. And so based on the weekly, I think this is going higher. So this is a more compressed time frame, and we can see what's going on here. So, this looked like, double top. You had two tops, you had two key reversals. But this is why I say you can't trade these reversals in a vacuum. Not all reversals are created equal. So that's what I said when I saw Pound New Zealand the other day. I thought Pound New Zealand, was in the process of turning around. And when you see these things, they're not all, what they, represent themselves to be, because the weekly chart tells me that this thing is in an uptrend. And we're just banging around the very highs here. You can see that we've just been consolidating here. And the more this hangs out here, the more energy it's building to break. When it breaks out, it's going to go to another level. And this is what I'm looking for in my trading. I'm looking for trades where I can, make the justification or make the, whatever you want to call it, make the case that this is going to go higher and substantially higher. If you told me this is going to 63 or 65 or 71, I could see that. And so that's what I'm looking for in trades. I'm looking for these setups. And if I have to just hang out here for a couple of weeks, while this thing is, doing its thing, so be it. If I'm going to make 10, 15 bucks out of this thing, and, I'm going to load up now, because I think the risk is increasingly being taken out of this thing. You're on this uptrend line. You've got these two key reversals right here. Made a new low close on the high. And today you made a new low close. So now it's a tug of war between these reversals and these reversals. But then you got to say, well, what is this thing really telling me? And based on that double bottom, inverted head and shoulders on the weekly, this is saying that inherently this is going to go higher over time. And that's the key phrase, over time. You know, I thought I was going to go here, but it took 4 more weeks here. And so some members may be pissed off, me and say, well, you said it was going to go higher here. This is going to go higher over time. And so this is the process of being, a patient trader waiting for bigger moves. So when I put on a trade here, I'm looking for 65 bucks, 70 bucks in this thing. And I'm going to load up because now I can see where the risk reward is. So if I put a buy stop over the high tomorrow, I could put a sell stop there. This is my risk. And, 75 is probably my reward. So this is what I'm trying to pull off in the markets. I'm not trying to find a 30-cent move 4 times a day in this bar on a 15-minute chart. So it's a different, kind of mentality. My thinking is if this thing's going to 75, why do I want to try and take out 30 cents every 15 minutes? I want to put on one trade and go and play tennis and, wake up, 2 months later and this thing's at 75 and I've made, a lot of dough because I'm just going to load up here because I think the risk is increasingly washed out. The more this just hangs out here, the more, I feel like my risk is. So that's the same thing with that Baidu trade, is that I couldn't really see a bar where I could kind of have cover. So this is what I look for. I look for, okay, what is the trend? What is the pattern? Double bottom, inverted head and shoulders. What is the price action? We have these key reversals here. So I know if I put a buy stop in here, even if I lose on this trade, I could make a justifiable case for this trade. I'm going to risk $3 to make 15 to 20 bucks. And I will do that trade every day and Sunday. And if I lose, then I can completely be at peace with myself that was, a good application. Jean-Louis says patterns are very often ambivalent. Yes, the market throws you a bunch of things, and that's why you got to sort out what is the governing price pattern. So when you see this, you say, wow, that's a double top. It is a double top. But I know that it isn't a double top because the long-term charts tell me that if this is bottoming, then how can it be topping? If this whole thing is a bottoming pattern, it's not going to top right here. So if this thing is a long-term bottoming pattern and it just broke out, this is not going to be a topping pattern. And the other thing is, let's say, okay, you think this is a top. So if you think this is a top, then could you make a justifiable case for getting short here? Could you see or visualize if you got short here that prices are just going to cut through all of this? I can't. So I just think that this is consolidating, and the more it consolidates, and you could even wait till the end of the week, not do anything tomorrow, and put a buy stop above the weekly highs, and just leave your buy stop there. And if it hits you next Wednesday, it's likely going to take you on a nice ride. And that's what I'm looking for in the market, where I can get in here, risk a few bucks. So that's my risk and that's my reward. Can you see how that might make you a few dollars in the market? Instead of looking at an individual bar and trying to extract 10 trades out of it, every day, paying your broker 2 or 3 pips on the spread and driving yourself nuts. Hattie asked, what about the short of Beyond Meat, which you mentioned yesterday? I did try shorting Beyond Meat today. I actually just got out of my trade, not because I don't think it's going down. I just feel like, I'll take a look at that in a minute. I just want to see one more. So don't tell me what you're thinking of doing. Tell me why you're thinking of doing it. So Michael's looking at the neckline of a head and shoulder. So Peloton kind of, again, these if you look at the NASDAQ, it's starting to break out higher. And all these stocks that were under pressure, look like they're having, these counter trend rallies. And short covering rallies can be a bitch. I mean, they can be very powerful. So instead of fighting it, so here's kind of what looks like a busted pattern here. This is Peloton. And it looked for all the world like it was setting up like a head and shoulders. And this is a great example. So here was the head and shoulders. And so if this is a head and shoulders, and so this is the neckline. So a neckline is simply a line that, draws through the pattern. And you can see this is how the market fakes you out, where, it makes a low and then it looks like it's kind of going lower, but it doesn't quite make it there. You can see how, there's a little space there. And then it's the other way. So this was a trap. So if you see this head and shoulders, then the price should do what? It should do that. But by the fact that it broke out of the shoulder here, it looks like a busted price pattern. And now this is going to be a short squeeze. And, this thing could go the other way very quickly. So this is a great way to look at how the market, gives you looks. And some patterns last for, a few days, few weeks. And that's all I'm looking to do is jump on patterns. So, we had a pattern here in Peloton on the daily where you had the double top, key reversal, head and shoulders, everything's perfect, right? So it lines up. And so you say to yourself, once this thing cracks the neckline, it should go lower. And so you get short, and it did. This thing dropped from whatever this level was, 140 to, under 100. So you made a good 40 on that ride. And again, what I'm trying to do is identify patterns like this and just take a chunk out of the middle. 15, 20 bucks out of a $40 move. That's what I'm trying to do, consistently. And then every once in a while, I'll take out a huge move. But, I load up, once I can, understand, what's going on, in this, here was your little narrow range bar. So you can see the range right here was very small. So all I would do the next day is put a sell stop right underneath that. And you put right into the market and you put into a fantastic move. So now you came to this major support area. And this guy here was very telling. That key reversal there is like a soldier standing in the way of any progress to the downside. And then you saw other key reversals here. And now you're actually breaking out of kind of this double bottom. So what I would watch for right here is this guy. If we can clear whatever that price is, we're not too far away, then it looks like, you could have a short squeeze and go the other way very quickly. So I would get out of those puts. So this high is around 126.5. So about $3 higher, you're going to hit some resistance. But it looks like this thing is, poised to take off. And, be a short squeeze where you just get, trapped in here and then it goes the other way. It might go the other way very quickly. All right, I'll look at Beyond Meat and then, I'll start winding this down. Hopefully you guys have got, a ton of input out of this. Hope you did. So this is the daily of BYND, kind of laid out the rationale why I think this is going to go, lower over time. But, I'm also very, so I can think whatever I want to think. Now I've got to be observant of what, the market is telling me. And as I said, there's just like 19, price levels that have hit this 115 area. And so, I do feel like eventually this thing's going to, have to take it out. I do feel like this is a very bare price pattern that's governing or dictating this thing. But it's not to say that, we can't come out of here and, have some kind of short squeeze before, it goes down. And maybe this is another bottom. I don't know. Maybe this guy here, just like Peloton, we had the reversal here. You've got kind of this double bottom forming. And so to me, you can do, a couple of things, whether you want to short this or go long. You could actually put, a buy stop above the high and a sell stop above the low, below the low. Right now, it looks like the energy, could fake you out. That's why I got out. I was short today. I got in, the market opened higher, and I just closed out my trade. It looks like, the market has got some support in here. And so you've got this inside bar where you had no follow through. Same with Zoom. I told our members, yesterday, put a sell stop under Zoom. And by putting a sell stop, it requires the market to confirm what you're looking at. So just like Beyond Meat, you could have put a sell stop here and you could see you would never have been triggered, just opened higher and stayed higher. And I love those days where I think something's going to happen. I put my, my order in and I'm wrong, but guess what? I don't pay a price for it, so there's just no cost to it. So there is kind of this downtrend line that, if we kind of take this out, you could get, some kind of short squeeze out of here. So I'm always looking for the traps. I'm always looking for, multiple ways that this thing could play. To me, WRK, doesn't create the ambivalence that some of these other trades do. So I look for trades where I can just kind of hone in and really understand, weekly price action, daily price action, my insurance day bar, layer it with the buy stop. And if I lose on WRK, then I'm happy to lose. But I have a feeling WRK will be $75 the next time perhaps you and I get together. So we'll see. Mustafa says, every session is the best session, thoroughly enjoyed and learned tons. So Mustafa, thank you for your continuing support as always. Bert says, Zoom is up again. Would you continue to try and short it? I kind of got out of my Zoom. I made a lot of money yesterday. I lost money today. That's just the way it goes. And I'm kind of skeptical here. I think that it's, you can have the same kind of short squeeze. The markets, look like they, Peloton and all these things, they're hitting these areas of support. And, the market, tends to respect. So you're bumping up against this trend line, which if this was going to work, so this is an example of, and I should have opened it up, yesterday's email where, I said, based on this key reversal, put your sell stop here at 319. And you can see the market just opened higher and went higher, and you never were triggered into the market. So I look for the market to confirm my analysis. So, I do all of my analysis. I look for my insurance day bar, the key reversal, then I put my sell stop there and require the market to actually confirm what I'm looking at. And you can see by going the other way and closing on the high, it's kind of counter to, what, and if something's starting to not go according to what I feel it should, then, it's going to do that other thing. So frankly, I think you could put a buy stop above the high tomorrow, because then it's going to break out of here and you could get a, huge short squeeze kind of play where, maybe the market comes back to, somewhere in here. So I still think long-term, this thing's going to go lower. But there are times where, the market puts on a pattern and you get these, what I call counter trend plays. It puts on a double bottom and you get these plays. And, you could have another one here. And I would be, looking just to short that next rally. But I wouldn't be opposed to also, getting on board that rally. So I might just fool around and put a buy stop tomorrow. Because the nice thing about these narrow range bars is that you can know where your risk is. So if you buy it here, you put your stop loss there, you've got a very, small risk. and you could get, a nice little surprise out of here. It feels like the market is kind of coiling up now and, ready to kind of explode the other way. So while I thought things were going to go lower, this may just take more time. We may just have one more huge push, and it could be just a huge push where you get a huge flourish to the upside and you can make, a ton of dough. I also got out of my Tesla today. Made a lot of money yesterday and just got out. And so this is the conflict, which is the governing. So again, what I try and do is look for patterns, double top, head and shoulders, that lead to certain events. So once that broke the neckline at 770, there was a nice ride to almost $500. You're talking about $300. And so my whole objective is to try and take a piece out of the middle. Once I see a pattern in a setup, then I just get positioned and look to take as much of it as I can. But, that was that pattern for then. But you can see, consistent with that long-term trend line in the NASDAQ, a lot of these stocks are observing this long-term trend line. And frankly, I thought right here, it should have broken there. And the fact that it didn't suggests that it's going back into the trend. So now you have what appears to be a double bottom and this narrow range bar. And all I would do, and all I'm going to do, is put a buy stop above the high tomorrow and let the market do all the work for me. If the market opens and goes lower, then I won't be put in this market. What is the high in Tesla today? I think around 689.5. Bingo, 689.5. All right, guys, I think I'm going to end it there. What I would really appreciate is if you could share your, your views on your experience here. I do these webinars and, I try and do my best to, give you guys some, input to help you make your trading. I'll put this in the, and so I'd really appreciate, if you could put something in the tip jar one way or another. If you had a bad experience, put it here. You can say why. If you had a good experience, it'll ask you why. And, if you could, instead of saying, hey, this was great, maybe just elaborate a little bit, share with others what you learned or didn't learn. So, and it also helps me by your input. So I know a lot of this, resides in my brain, and I never know if I communicate it effectively or if it's making any sense. And if it's all bollocks to you, then I get that too. And you can say that. So whatever you'd like to say. So Michael says, thanks. I've been part of your gold member for many years, and I've learned very much. So Michael, thank you for that. Zradko says, again, thank you, Mark, for your analysis. It keeps my mind sharp. So again, if you wouldn't mind, putting some of these comments in that review thing, it goes on Trustpilot, which, tells others that, it's completely authentic. So we don't manipulate that. Ronnie says, thank you, Mark. It's been a great week. So that's been my pleasure. I love doing these things. It's like I look at the market all day and there's a lot of stuff going in my head. So, it kind of gives me an opportunity to just, verbalize a lot of, my internal thinking. And if it helps you, then Tanya says, thanks, Mark, for your time. Every time it gets clearer. Matthew says, really appreciate your time. You guys are absolutely welcome. Craig says, coming in so much. Marina says, thank you. It was very interesting information. I'm trying to, these comments coming so fast. Craig says, thank you very much. Your passion is infectious. I can tell how much you love teaching and it shines through. Well, I'm a trader at heart. When I started this, education business, I didn't, have any idea of what it would involve. And it really, it's very gratifying to be able to give back because I've made so many mistakes. I've gone into so many potholes, and it's taken me a while to kind of figure out, okay, where are the opportunities, where are the risks, and if I can share that and help you, then it. I make a lot more in trading than I do in my business. I promise you that. So I love trading. It's every day is a new day. It's a new challenge, and I like applying what I think I see and seeing if it works out. So to me, it's really kind of not even about the money anymore. So if I put on WRK and it works, it's like, okay, I'm kind of on the right. I see things in a way that when I bought Lyft a couple of months ago at $46, and now it's $65. I love that validation. And the fact that I made some money on it is really, I don't even know how much money I made on it. I buy the stock, I buy the options, I get in, I get out, and then I move on to the next trade. And so I don't really look at the money, win or lose. To me, it's just, what is the setup today? What is the risk reward? Can I make, a valid case for getting in something where I can see this is going to go from one level to another and for a reasonable risk? And that's really, to me, that's the holy grail. If, people say, I just wish I could find the holy grail of trading. There's no one answer, but if you can boil things down where you can, make a legitimate setup, for 3-to-1 risk reward, if you can see 150 pip move to take a 50 pip risk, and, then you'll make a lot of money over time. What you won't be successful on a long-term basis is trading on 15-minute charts. And that's not my opinion. It's just, the market statistics are terrible. 90%, I think it's probably more, of certainly Forex traders are losing most or all of their money within 3 months of opening their account. And, it's like, if all of this stuff worked, if these expert advisors worked, if, all of these teaching systems worked, then why are 90% of people failing? So, it comes down to a lot, but to me, it's, understanding the cards you're holding. And if you look at a 15-minute chart, it's a random pattern. It can look like a double top. It'll go, for a while, consistent with a double top. And if you want to kind of snatch that, then, but what I'm trying to do is look at a WRK trading at 53, and I can make the case that this is going to go to the high 60s, low 70s, or possibly above. So if I can load up here, and the risk is getting smaller and smaller, the more it kind of grinds in this $51 to $55 area, at some point when I get it, it's going to stop grinding and I think go. So that's what I'm looking for. And if I have to wait 5 weeks for, WRK to kind of work out the grind, so be it. And then I'll leg in, just like I did with Lyft, and I'll go for a $20 ride. So Lars says, thank you for sharing your great knowledge, Mark. This has been 4 great days, and I look forward to following you in the years to come. So Lars, thanks a lot for that. Appreciate that. Jay-Z says, thank you, Mark. You're an artist at work. So again, if you would share your experiences in this link, and I think I put it in there, I'll put it in again, I would really appreciate it. It helps me and possibly helps others. There's a lot of negative stuff written about me. You can go to a couple of websites. I forgot what they are. They're Nigerian scam websites. And what they do is say really negative stuff about me so that you can then buy their stuff. So these are FX guys. They have, expert advisors. And what they do is they try and draft off all of my traffic. So all of the people like yourselves that come to, they try and get you. So they have a link that says the pattern trader or something else. So you think, that link is me. You go there and then it says all kinds of stuff that I went to jail and, paid the SEC $6 million. I did have a problem with the SEC, but all of that stuff is, just made up in order to disparage my reputation, impugn my credibility, and redirect you to buy their stuff. So, it really helps me if you put in a comment so that other people can see that, I'm trying to be an ethical, transparent guy. I mean, these are free webinars. So, it always kind of, amuses me when, I see on YouTube, comments here, this guy's a scammer, he's doing this and that. And I'm given a free webinar for 4 days, sharing all the information I've learned, over a lifetime. And then some people just need to hate or vent or whatever. And so again, it really just helps me and others. If you like this, you thought there was some value in here, then I'd be very grateful if you would just share that. Actually, I didn't put that in the YouTube. I'll put the link in YouTube also. Daniel, if you want a recording of this, I think you can message our support team. Just send an email to support@thepatterntrader.com, support@thepatterntrader.com. And I don't know if they are live streaming on YouTube also. So I think you can find them on YouTube. So David said, you're amazing. One question, if you had to start all over again with $10,000, what would you do? Well, I've been there. I was sued by the SEC. My licenses were taken away. I had a 6-month-old son. I didn't know what I was going to do. And so I just went to work, doing all the things that I'd done for 20 years, managing other people's money, managing high net worth customers. I just, I had probably less than 10K in around 2000. So David, I'm not telling you anything that I haven't done myself, and I've run it to substantial 7 figures. So it's just, the tortoise wins the race. If you do the right things and apply, the right things. And again, if you look at it this way, instead of looking at how much money you made or lost each day, you should say, well, what is my objective as a trader, as a person? What am I really trying to accomplish? Because I think, look, if we really want to admit it, and I have my fun accounts. I mean, what I did today, I just play around. We all like to trade. We like the bump, the rush, the action. We're all sitting at home here, it fulfills, some vacuum in us. But you have to realize, you have to ask yourself, really, what is it? What is the underlying reason why I am trading? Is it a distraction from, something else that's going on in your life? Or, and people say, well, of course, I just want to make money. But, if you do, are you doing the things that will make you money? So the problem with being a trader, we live a life like no other, where, I put in a buy stop and then I go and play tennis all day. It's like I bought, Lyft at, 44, bought a buy stop, bought some options, and that's all I did. I was recovering from surgery. I, just was resting and doing whatever. And I let the market do all the work for me. So I think the problem is that we have to validate our existence to ourselves, to our wives, to our friends. We're telling people, hey, we're a trader. We traded the gold market today. So then now you're on the golf course and you told your friend last week that, you think gold is going down, and now gold's turning around. Now you have a hard time. Well, I just told him it's going down. Now, how can I say to him or myself it's going up? And so you have to be aware of all of the demons. We're sitting in front of these screens, and meantime, all this garbage is going through our head. And so to me, I just found a mousetrap, which was really a firewall against me, because I'm inherently an emotional person, a reactive person. I can get carried away. And so I just figured out what I wanted in the markets. It's like when I see a move, if I see WRK going from 53 to 68, I want to make, $6 or $7 out of that move. And if I buy a nice handful of shares, it'll represent a nice, bucket of money. And so for me, all I'm going to do is put a buy stop over the high tomorrow, and that's it. Let the market do its work. If I get put in, I have my stop loss, and then I go about my day. So it's just a very different way, and the problem with that is, WRK has been working sideways for, weeks now. So while you're focusing on that and looking for that opportunity, you're really not doing anything. So now how do you go to your wife or your husband or whatever and say, and justify your existence? You didn't do anything today. You didn't do anything tomorrow. You haven't done anything for 3 weeks. How can you call yourself a trader? So it's these challenges that are very formidable. It's not easy. I mean, I just show this kind of magic show, and then you get off and you go, well, whoa, how do I, go about doing this? And, the market's not easy. It's like Zoom, it's just bumping along the bottom, and you're wondering, is this going down? Is it going up? And it's playing with your head. And you have to wait a while for it to sort out. And then when it sorts out, you see the clarity and you hit it, and then you make all your money. But it could take weeks to sort it all out. Yet gold has made this little bump off the bottom. We could have another little extension, and then it could go into, a grind for 2 weeks. So if you're trading gold, then, what do you do? And so most people, equate trading with a verb, with an activity. It's like doing something. So we look at this 15-minute chart, got all these Bollinger Bands and things and, entries. And so it kind of like validates, okay, this is what I'm a trader. But, what is the long-term of that kind of trading, consequence of that trading? And so I made all of the mistakes. I used to trade 5-minute charts and 15-minute charts and 4-hour charts. And I can see, and sometimes it pisses me off, that if I just went to the 4-hour chart, I could have seen the turn earlier than I did. But in the long run, if I just look at the daily chart and I'm looking at the bigger move, I have clarity. And so that's the problem. You have so much clutter in your brain. You're looking at so many things. There's so much stimuli that it wears your brain down. And at some point, you just can't be effective. So I found the best way to do that is kind of take it from a high level, from a global level, and understand really what's going on. Because if you look at WRK, yeah, it's been going in this $3, $5 range. And if you're just looking at a 15-minute chart, that's all you see. But if you pull back and understand what the governing price pattern and trajectory is, or I think it is, then with that clarity, you can make, bigger decisions and better decisions. Thanks, David. I appreciate that. Thanks for posting that, Gabrielle. I appreciate it. David says, thanks, Mark. Very true. Your trading style is very helpful. By the way, I'd be happy to help you with your marketing. I would love to chat. David, just send something to our support team and tell them to forward it to me. support@thepatterntrader.com. And then I'd love to hook up with you. Thanks, Ronald. I appreciate it. Daniel says, which trading platform are you using? So I use, I've got a dozen brokers all over the world that I use for Forex, for money management, for wealth management, for trading. So I prefer not to share that because, I'm not endorsed by any broker and I'm not licensed. And so I don't want any problems with any securities, representative. So when people say, well, you're not showing your account, when I show screenshots, this is my account. It doesn't have my broker on it, but I assure you, this is from my own personal account. And I'm not going to, just for the purpose of satisfying somebody on the internet, share my personal thing. And since I'm not endorsed by a broker, and I'm not endorsing any other broker, I purposely, don't talk about my broker relationships. If you're, looking at trading, there's tons of regulated brokers around the world. I think Interactive Brokers, you can sign up anywhere in the world and you can trade any instrument on that platform. But I'm sure wherever you live, there's got to be some good brokers that you can access. Marcus says, so Mark, if you want to get trading signals from you, do I email you about it? So I don't even know if that links up anymore. So we have an elite program. I put the link up, but I think our team takes these things down. Let me see if it's still up. Yeah, so if you want my daily emails, let's see who asked that question. It was Marku. Then just watch this video and the instructions and send an email to me here, and that's how you access my programs, Marku. That has a video in there. And again, you don't just sign up for it. We have a team member speak to you personally, make sure you understand, everything about the program. And David says, I emailed your support team. Okay, cool. All right. I think I'm going to leave you guys there. I hope you guys had, a valuable week, and, look forward to, helping you guys and seeing you somewhere along our journey together. So thanks a ton, and really appreciate it. Mustafa. Thanks, man. Thanks, Daniel. All right, guys, we'll see you soon.